Yes, welcome to my YouTube channel. This is my first official video I'm making. Yeah, I wanted to do this video for some time now, but I wasn't feeling well, so I just wanted to. But let's just jump right into it. So, since this is my official video, I was thinking or contemplating whether to do a first timers course or. So I'll do it, build upon that to showcase my strategy, my edge in this market. So without much ado, let's just jump right into it. Alright, so first of all, what I'm going to show you is that I'm going to define what trading is, or what trading in the financial market is, because you've heard the term trading, this is not the first time. So, but in the financial market, what trading is? Trading is just simple. This is the same analogy from normal traditional trading that you know. Then just bring it to the financial market. So you buy at a certain level. If it goes up, you make profit, or if it goes up and you make profit, or you sell at a certain level. If at the level which you bought it was low as compared to the price which you sold it, you make loss. It's the same thing over here. You get me? So now let me explain it using the chart. So let's say, imagine you have so we'll get to analysis. So you've done your analysis and you are like, okay, based on my speculation, or based on, come to this conclusion that okay, looking at where price is right now, price will go up. You get me? So I'll buy here. You get me? So let's say price will go up, so I'll buy it. So if price moves from this point to, let's say, this point, and let's say your bet was 1 CD, and let me say this point from year to year, and your bet was, let's say, 1 CD, you would have made 2 CDs, or $2 over here. Let me use dollars. Do you get me? But if price had gone against you to this point, you would have lost what? So this is what, minus a plus $1. You get me? Then minus $1. So for in this case, probably price went in our way, so we won what? Plus $1. Let me use dollars rather. I was using my local currency, the Ghana cedis, USD. Everybody's familiar with the USD. So if price goes up, you would have made plus $1 towards your $1 that you bet on. But if price went against or goes against you in this trade, you would have what? Made negative $1. Do you get me? So yeah, so that's the meaning of trading. But in trading, what we have is that if it comes to like the traditional side, you can only what? Buy. Do you get me? As a this one, as a trader, you can only buy. Do you get me? You can only buy. Okay, you can buy and sell. This side too, you can buy and sell. You can buy and make money, and sell and make money also. So for instance, let's say here, same level. Then imagine we sold over here. So sell. Let me say sell. Let me put it. So so we buy. So this is for buy, this is for buy. Then imagine we sell again. So right now we need to swap this and put it here, and put it here. Yeah, so this is, we sell here, if price goes in our favor, we make what? Plus positive what? $1. You get me? We can decide to extend it to in trading. The beautiful thing is that you can decide to make more. So probably you might decide this based on this movement, you might make maybe an extra $3, or let me say $3. You get me? So yeah, $3, an extra $3, based on if price comes to this level. If only price comes to this level. So now the question is, how will you know that price will come to this level? Do you get me? How will you know that price will come to this level? So we are going to study the movement, or how price move, the movement of price. Do you get me? So you are seeing the chart, and you're like, oh, how will I get to know the market? We are coming to talk about the market movement. So this is how the market moves. Sorry. So this is how the market moves. We have three phases. Market movement. The market movement. Okay, let me bold in this. 16. Yeah, so we have market movement. And now we have three phases. We have the bullish trend. We have the bullish trend. We have the bearish trend, and we have the consolidation. That consolidation. So now let me use the arrow to draw it. So first of all, this is how the bullish. Alright, so this is a bullish trend. You can just manage it. So this is a bullish trend, and this is a consolidation, and this is bearish trend. So first of all, if you want to know whether it's a trend, use this line to connect it. Use this line to connect it. So most of the time, as a trader or as a retail trader, you are supposed you have a saying that the trend is your friend. Do you get me? The trend is your friend. They have a saying that the trend is your friend. So first of all, how do you know that this is a bullish trend? So if you pay much attention, you see that here the movement over here from here to here it goes faster, and when it comes down here, it doesn't come exactly to the down, or it doesn't break this level, this side. It doesn't break this side again. You see that it won't break this side again. and it won't break this side again. Do you get me? It just keeps on going, like climbing like a ladder. Do you get me? I call this one ladder. I don't call it trend line, so I call it ladder. So as a retail trader, your focus should be on this kind of movement. That is where you get the easiest money. Do you get me? You get the easiest money. So in the trend, we have two phases. We have the impulse move. We have two movements. We have the impulse move and we have the correction move. So first of all, this huge movement is what? The impulse move. Impulsive. Let me do impulsive. Then we have what? The correction, which is the smallest. So correction. So we have the correction. So we have the impulsive move, then we have the correction move. Do you get me? So those are the two movements we have. So the impulsive move is a big move. Then after that we have a correction move, which is coming down. And this movement, most of the time, it takes some time before going. And when it's in a bullish trend, and when it's going up, you see that it goes up very faster because there is more volume over there. Do you get me? Yeah. So our next step, we've already identified the trend, the bullish trend. This is a bullish trend, and now we have a consolidation zone. So this is where price we don't have any decision yet. It doesn't make any decision yet. It goes up and down, and yeah, it goes up and down. If you know how to trade this too, you can make money. It goes up and down, doesn't decide on anything. But I don't actually trade this type of market. When I see consolidation zone, I just go out. I don't like this kind of market. Yeah. So goes up, comes down, goes up, comes down, goes up, comes down. Yeah, that's a consolidation zone. So that's a consolidation. And now we have the bearish trend. So there's a bearish trend. We have a bearish trend. So we have what? First of all, we have the impulsive move. This is the impulsive move. And this is a correction move. So we have the impulsive move and we have the correction move. So the impulsive move is this sell, this line. Then the correction move is this one coming down here. Do you get me? Coming down to the side. So you can see that price didn't come back to this, didn't break this level again, because if price had broken this level, we would have gotten another trend, or maybe probably would have broken the sell trend or the bearish trend. Do you get me? We have sell trend or bearish trend, or we have the buy trend or sell trend. Yeah, so this is enough of the lines and this one. So let me show you on a real chart. Let me show you this three faces on a real chart. So first of all, as you can see, the chart is always not perfect like the way you see it over here. Obviously this one is a perfect method. So but because I have the experience on all those things, I'll show you. So so there's the daily. Okay, let me start from here. So if you can see, we had a price coming back to this level. It didn't come back here. The price broke this level. Okay, let me use the 4-hour time frame. So I'll show you 4 time frames too, but right now let me just be switching because we're on the daily. So on the daily, so let me start from here. So if you can see for yourself, we have a price coming back to from here, comes down here, break the structure, now comes back again, but it didn't come down to this side, now went up all the way to this side. You get me? And now after we had a consolidation zone, price didn't know where to go. You get me? Price didn't know where to go until we had a push. I don't know. There's a gap. So price gap down and came down again. Still, it came back to the zone. We didn't have anything until we started getting. We had a break over here. So you can see we had a break here. Now after this break, now you can see that price came back again to the zone here, and now price started going down. Price started going down. So do you see? So when I do duplicate this, you see that there's a trend. When I duplicate this, you see that there's a consolidation zone. When I duplicate this, you see that there's a all this one. But you see that it doesn't look perfect, or it doesn't look textbookish. Let me use that word. I don't know whether we have that word. It doesn't look textbookish. Yeah, so yeah, this is what I was talking about. So this is basically a trend. Alright, so now what is next? The next thing is we need to know is, okay, how do we spot, or how do we know if let's say for instance we are in a bullish trend like this, how do we spot zones where price will take off? Do you get me? That's our next move. So right now we've identified what the phases of the market. First of all, we have the bullish trend, we have the consolidation zone, and then we have the bearish trend. You get it? So these are the 3 phases we have. Then after that, we'll do what? We'll identify where price will kick off, or where price will get volume to kick off. So that is easy. So for me personally, everybody has ways and means to do it, to do that. But for me personally, I like to use like candlesticks to do that. Do you get me? So for instance, we had a what? Looking at here, we had a structure here. Do you get me? We had a structure here. We had a break here. So what do? I look out for candles where there is what? So we have the first candle. So you have the first candle. So there's the first. We have the first candle. This is the first candle. Then the next candle, we have some. You can see a gap over here. I like to see like that gap. Then I'll know in my mind, there is volume here. So when price come back to this side again, I should actually watch out for another push. So there's a okay. So I need to watch this. I need to see the first candle. Then after that, the second candle should provide me with a gap here. As you can see a gap here. As you can see a gap here. So in my mind, when I see this kind of chart again, I'll be like, okay, when price after this correction move, this and correction move, so price is just correcting. Do you get me? So we have impulse correction, impulse correction, impulse correction. So you can see after we had this impulsive move and price was now returning back, we got another what? I'll mark out my zone from here, extend my box to this side. knowing that okay, this zone is where volume was likely to pick up again. Then I'll bring my measuring tool, measure probably 1:3. I really like 1:3 setup. Measure 1:3, but bear in mind, I need to see a candlestick confirmation before, and I'll put my stop loss around here. So just this box, then I'll give some small space around here. So price, then I'll just leave 1:3. There's even 1:4. Do you get me? I can even target 1:3. So the candles inside with the blue line, this blue zone is profit, actual profit. Do you get me? This is a measuring tool for the profit measuring tool. So this is even more than 1:3, 1:2. So this 1:3. So if I'm risking $1, I'm gaining $3. Do you get me? This is what it means. If I'm risking $1, then if I'm risking $100, I'm gaining $300. Do you get me? If I want more, if I think price will go up more, if 1:4, I'm risking $100, I'm gaining $400. Do you get me? So that's the meaning. Okay, now after we've gotten our 1:4, then we'll go back again. So bear in mind, we are not interested in the correction move. I don't want to catch the correction, because correction move, if you are not really an expert, or you are not actually good at it, you spend a lot of money over there. So as you can see, impulsive, the last candle before the big move, then you mark out the block over here. Then you do it. So if you want to go more, 1:3 or 1:4, 1:5, this can even give you 1:13. So imagine you're risking $1, you are getting $1,300. Do you get me? But if only you can hold it. So have you seen the way it is very, very simple? This is very, very simple. And with just this knowledge, or with just this, you can start making money right away. If you had, but you need to learn other things attached to it. You need to learn risk management. Yeah, risk management is a very important topic. So the same thing, we come back to, if you come back to here too, you can see the same thing over here. The last candle before, obviously there was some gap here, and we move here. Let me remove it. But first of all, bear in mind I need to see a break of structure first. So, but before then, bear in mind I need to have this. You need to have a break of structure. So there's a structure. You first need to break the structure first. So you have another break of structure here. Do you get me? Then before you consider this candle. So you need to see the last candle. You need to see this last candle before the impulsive move. Last candle before the impulsive move. Last candle before the huge candle creating a gap. Then you had a correction. Do you get me? Yeah. So the same applies to this side. So we had a correction. We had price coming down here, breaking the structure. After breaking the structure, okay, now we know that we are inside this zone is valid. Do you get me? So now we'll put our measuring tool here, because we are going this time around we are going down. So we'll put our measuring tool here. If you are targeting 1:3, you target 1:3. So 1:3 there around. Yeah, you target 1:3. Then the next one we are looking at is, so it happens often. We have another one over here too. Let me show you another one. We had a break of structure here. Do you get me? Then after that we had this candle. This candle. Yes.
Hey, you got a new kettle. A new kettle is a new. Judge!
So then we had another sell over here. So there's a sell. There's a beautiful sell. 1:3. This is even 1:8. 1:8. 1:7. So you get it. So it's something that repeats over and 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 over again. So the only thing you need to add to it is you need to know your risk management. When you get your risk management right, then you are good to go. You don't need much. I told you, you don't need much. You don't need much technicals in this. It's just one or two things you need to identify. When you identify it, that's all. Yeah, you just keep on building up on it, building up on it. So there's a complete strategy that will give you, like, make you excessive money, like real money. You get me? Alright. So I think that is it for this video. Like and subscribe. Peace out.